How are we doing today? Morning, morning. Good night to you. Well, good night. Good evening to you guys that are from the EST time zone. I know Kaylee, I don't know where you're from, but clearly it's not early during the day for you. How's everybody doing? Everyone doing good? Awesome. All right. Well, let's get straight into it. We had a busy day today. Um, I had the right idea in mind from the start, so it went great. But with hindsight, right, taking a step back, I can see how possibly today there was a little bit of confusion, because there were a lot of things going on. Well, I guess we can call it luck that I was on the right side of the markets on this specific day, but there were a lot of different things telling you different stories, right? So we'll go deep into it. But first off, I just want to take you guys' mind and just take your guys' attention specifically to what happened this week, right? Because we're at the end of the week, so you should be thinking in which direction is the weekly expansion, right? What's our weekly objective? And as we outlined in the weekly outlook from this week, we had buy side objective, right? After all of this low resistance liquidity with these relative equal highs as a low hanging fruit objective, those were our objective for both NASDAQ and ES right here. I'll just mark it out. We had the relative equal highs because as you can see, like right here, we had SMT between ES and NQ at these highs. So just to point out that that's why we had these objectives also on NASDAQ, because we did not need to take out this high as it had been previously interacted with SMT. But both ES and NQ reached their objectives. So after taking out external range liquidity, you would expect some sort of retracement, and we fully took it out, right? This morning on NASDAQ, a little bit yesterday on ES, but mostly this morning, we ran above, and you would expect a run above, right? A true sweep of liquidity is a true stop run, just in general, is deep and not shallow. So we swept external liquidity and started a retracement, taking into account that we are within a classic buy week. Meaning what? Well, low of the week was formed on Tuesday, right? This is all stuff we previously outlined this week during weekly outlooks, was formed on Tuesday, and then we expanded higher. Our weekly expansion is towards buy side liquidity. Our objective has been met, so you can expect a TGIF on Thursday. I'm just making sure there are no questions associated with that. This is all stuff ICT covered directly in the TG. Oh, sorry guys, I just drank a whole lot of water just before this call. But this is all stuff ICT covered during his TGIF video, so I'm not going to go back over it. We could do a live study over that video at some point, but 20 to 30% retracement of the weekly expansion, right? Our objective has been met, ERL to RL. That was my insight for the day. So I was looking for a retracement into internal range liquidity. But taking into account NASDAQ did not run above this high, I was either needed to see lower time frame SMT on the highs, or more specifically, our run up to then go down. And that's where all the opportunity came today, from that first initial run up with our 10 a.m. power of 3, followed by the run down in the afternoon, digging back into this fair value gap, and more specifically, our retracement levels for 20 to 30% of the weekly expansion. If we dive down to our intra-week time frame, that's where it becomes very clear. We took out external range liquidity, this buy side right here. I'm going to hide TGIF for now. Yeah, I'm just going to delete it for now. Just understand, actually, you know what? Because I want to remove these black and white, these black lines. So I'm just going to remove this very quickly. Have a little less drawings on the chart. But what can we see in our intra-week time frame? Well, we had our weekly expansion after making low of week. Of course, I believe we had no SMT at this level, correct? Oh, well, we did not. No, we did not. We had divergence, but no SMT, right? This fair value gap was made here, while there was none here. Propulsion block mean threshold, while ES retraces into a fair value gap. But what we were concentrated on was the order block right here. More specifically, order block and fair value gap on ES. As I said in the weekly outlook, I was expecting NASDAQ to retrace deeper, but as we can tell right now, it did not need to. But what I really want to bring your attentions on about today was just looking at your intermediate time frame movements. So as you can see, we rated our highs right here. And then what did we have lower? Well, we had inducement of this liquidity. That is the big thing that just turned my eyes towards this. On our 9:30 open, we induced these lows without taking them out, and I'm looking at both ES and NQ. And yes, this is not a swing low, of course. So there's no liquidity under that low specifically in this time frame for ES. But this is still a draw, and there is no SMT at this level. So I was expecting my draw to be here. And of course, before that can happen, we need to shift in market structure. And more specifically, as a lot of my students know, I always say it like this: before we can switch from a buy model to a sell model, we first have to take out liquidity above, and vice versa, right? We first have to manipulate before we can distribute price to the right direction. So if we dive down to a 15-minute chart here and get a little more insight, we have clear consolidation right here. We took out the lows of consolidation, which would tell you that we would then go up. And if we look, no divergence at this level. We took out both lows, and there is no SMT because we leave those lows open on both NASDAQ and ES. But what do we do after? Well, we have lower time frame SMT right here. I'll mark it out for you guys. Between these lows, let me just mark it out correctly very quickly. I'll just remove the text, but you guys know blue is SMT, and we have SMT right here. So you had E and Q be your stronger assets. So if you were looking for longs towards these relative equal highs right here, after taking out the low of the consolidation, well, you had a first run up. That was the first trade idea. Early during the day, was looking for first run up, and with the 10 a.m. opening manipulating lower, confirming by SMT, we'll then go look for 1-minute trade setups. But I want to keep going on the intraday order flow before we dive into and look at the specific entries related to that. After our objective has been met right here, and we understand that our higher time frame context is bearish, we are looking for bearish retracement. So a retracement lower, all we're saying. Of course, our trend is bullish. We all know that. We just expanded very aggressively this week, but we are now looking for 20 to 30% retracement, which is these levels right here. 20 to 30% is your TGIF levels. And if we add confluence by looking at the range we are in, it means that we are going to go for this induced relative equal lows as just a regular low-hanging fruit objective. I just want to go back to my hourly and show you guys there was also this fair value gap to add confluence. So sweeping this liquidity into this fair value gap was the main draw. And as you can see, we swept it and then continued lower. We're going to keep going on the lower time frame after I draw up a few things. So first we had this. I'm not going to go in depth about market maker models because, as I told you guys, there is no point in understanding them if you're trading my personal model. But if you look at this very quickly, we can see that we formed a trend continuation, right? So we went higher and then shifted lower on our lower time frames, of course, before invalidating a bullish array. That is the first sign that you can start seeing lower prices. And of course, it's not a 1-minute inverted fair value gap. It's a 15-minute. It's my intraday time frame. We inverted, retesting, and of course, we're not respecting it, but we traded back into this order block, respecting mean threshold. Let me just draw it out. Respecting mean threshold, meaning not even reaching mean threshold before diving lower. So that is a big indication that, hey, were bearish, right? And as you can see, of course, the move prevailed. We're going to go look in 1 minute, but I just wanted to first share the ideas of how you could understand that we were first going to go up. Let me just bring the opacity back up on this one. We were first going to go up, and then the understanding and specifically at which point could you expect lower prices, right? And from this point on, you had clear objective with these induced lows. And furthermore, I believe we had lower time frame equal lows. Well, actually right here, those are equal lows as well, that we went to take out before our first retracement and then continuation. So now we can finally dive deeper to our 1 minute, and I'll push ES to the side because, as I said, I always prioritized trading NASDAQ, right? I'm just going to leave this 15-minute order block and fair value gap up. Going to remove this buy side liquidity, right? We rated overnight, finished our move from yesterday, but now we had our first news right here, our only news actually, which is unemployment claims. Specifically for unemployment claims, what I've noticed through time is that it usually forms a very long Judas swing. So not long in terms of price, but mostly in terms of time, which is why I don't trade before 9:30 when it is that specific news. Some news that are at 8:30, I start trading before the 9:30 open, but not this specific one. It's just something I've noticed personally, so you guys can take that if you want to. But we see Judas swing higher and then move lower. So I was anticipating that this was our true Judas swing based on the understanding, right? We only went up to then go down, took out the liquidity right here before expanding lower. When did it start expanding higher? Well, when time aligned with price at the 9:30 open, later forming SMT. I am actually going to bring ES a little closer right here. And why is it bugged? And I am going to locate, well, my ES chart is not following my other charts. Time range. Okay, well, it's not working. I'll just move it aside and we can look at the 9:30 open. I want to point out the SMT that was there beforehand, which I believe was this low. Okay, no, there we go. So there was just divergence in time just in general, but if we look to the left, we can see SMT right here. That's what I wanted to point out. So I'm going to remove this higher time frame SMT, and we are going to look at this lower time frame SMT. Even better if I point it out like this. I'll just make it a little bigger for you guys to see. So we had divergence more specifically in time. What do I mean by that? Right at the 9:30 open. So you had your Judas swing going lower on NASDAQ. And let's just be honest, this is very tight. I would see this whole move as manipulation at this specific point. And then you had confirmation on ES that, hey, indeed we have divergence. The low has been put in, but we had to go again. Why? Well, just after a large range day, you can expect a little more resistance, right? A little higher resistance conditions. And as you can see, they were high resistance condition, but it doesn't mean we did not have any opportunity because we still had news. It was still a high probability trading day, just as I said, after a large expansion. But seeing this SMT, having the reaction higher, and then seeing ES consolidate like that, I would have waited. But you still had a unicorn setup right here that would have reached all the way to your low-hanging fruit objective. So I'm still going to point it out, but as I said, I would have been out right here just seeing how ES consolidates while NASDAQ is trying to expand. That is very clear signs that we are about to have a deep retracement, if not an expansion. Of course, we can tell with hindsight now, but when I see these conditions, one correlated asset is consolidating while the other one is trying to expand, you usually have a very low resistance retracement. And that's not something I like to be in a trade for. But just very clearly, seeing this range, I'm going to mark out the full range with standard deviations so you guys can see. This range, I have low, high, lower low, confirmed with SMT, making it even higher probability. And then trading above this high forms a breaker block. It also forms a market structure shift, of course. I'll mark it out very quickly. I still don't have a template. You know what? Let's do one right now. So MSS, let's do that 12. Sorry guys, but as I said, I'm ever changing my templates. So you had your market structure shift right here, forming your breaker block, confirmed with SMT. So you could take this overlapping fair value gap as a unicorn entry. And then again, using the 3PD array stop loss rule, you had fair value gap, I see order block. I do not see an inverted fair value gap up to here, but it was already inverted and disrespected, so I'm not going to utilize that. This has been inverted. So this as well, this is kind of higher, but respecting consequent encroachment. This is a weird instance where I would use this inverted fair value gap as a third PD array because price trades into it, and I'm allowing a mohawk by taking the entry in this bottom fair value gap. So it's a little bit of a weird trade, as I just said, you know, but these would be my 3 PD arrays. So my stop would be at the swing low right next to the order block. And as you can see, that's quite a decent stop after seeing the price action. But what would be your low-hanging fruit objective? Well, I would look at premium and discount. Let me just mark that out correctly of the current range, right? And right now, what are we doing? Well, we're trading. My plan is to trade back into this range. And of course, if I'm going long, I'm expecting it to get all the way to external range liquidity and our higher time frame objective, which was just current highs at the moment. Let me just mark that out as lower time frame external, which is basically saying intraday external, which is what? 15-minute, right? I'm just always going back to what I'm saying, but these were all relative equal highs, just highs of general consolidation. Let me go back to it. There we go. So my low-hanging fruit objective, I would go to a 5-minute chart and find an inefficiency in premium, well, a clear inefficiency in premium. We have nothing here but this order block at equilibrium, which I don't expect that we will respect no matter if we're going up or down. So I'm going to utilize this inefficiency. Let me just mark it out. This 5-minute fair value gap as where it will reverse if this was a fake move. Right? And what do I mean by a fake move? Of course, manipulation. If we see right here, it looks picture perfect. But you guys know, right? I'm going to drop, if you guys want, I can drop the material again, the picture of my model. You know what? I'm actually gonna open it right now. Why not? You guys might get some little insight into something. Let me just find it very quickly. It's gonna take me a second or two. Oh, well, it's lagging because I'm recording at the same time. That's awesome. I'll send it in chat right after. But you remember the drawing of my model, it's very clear. How do you find your low-hanging fruit objective? Well, you use premium and discount of the current range, the expansion from the morning. You would then utilize standard deviations in confluence with premium and discount, of course, to find a low-hanging fruit objective, which is your first premium inefficiency that will reverse at this level if you are wrong about this objective. And as you can see, that's exactly what happened. So it offered, let me just put it correctly, 1.31, which to me, that is not a trade I like to take. I would wait for my low-hanging fruit to offer at least 2R. And you can debate whatever you want about putting your stop higher, even putting your stop at the low of this candle, which offered more, but that is discretionary, right? And I wanted my model to be able to have clear mechanical rules for beginners. And yes, I did trade this with a tighter stop loss, but that comes with more understanding and more specifically, more experience. So maybe this is a trade that you would not have taken. But if we move forward, let me just clear the chart very quickly. Please let me take all of this. Thank you. And we look at the SMT form. I don't know why my ES is not wanted to adjust to this layout, but we had more SMT form at these lows. So I'm just looking at these specific ones in relation, but we can utilize and just see that, hey, ES went and took out this low while NASDAQ did not. Let me just put that the same color so it's not too confusing. So after you got take profited, if you traded the move before, partial profits and then stopped at break even, well, you now have another opportunity to form because you have the confirmation from SMT and of course high resistance condition, deep retracement. But then your idea is still valid even though we went to sweep these lows again on ES. It's actually even cleaner, right? Because we just took out equal lows on ES. So it is very much a great idea still. And then we see displacement. You would wait for your breaker block to form. On ES formed a little earlier, but did not give a re-entry opportunity. On NASDAQ, your first breaker was right here. You also had a breaker block just above right here that I would like to utilize as well. So I'm just going to draw out both and leave this one on my main color. And as you can see, no matter if you're utilizing this breaker or this breaker, you're still getting the same unicorn, which is this 1 minute fair value gap right here, which gives you a beautiful entry. Of course, all looks hindsight. It looks picture perfect taken. That's why I was very excited for today. We had a lot of beautiful price action with this model. And again, 1 PD array. Then you have inverted fair value gap right here. You just look for the ones in the closest proximity, right? And then you have what? Your order block right here. That gives me a stop under the low of this specific candle. And then what are your objectives? Well, you have the data highs, which are just the highs of the news movement, right? Which are a great low-hanging fruit objective. What I like to do when I see large wicks like these is utilize quarters of said wick and see how we respect or disrespect said levels. So if I'm entering here, we're closing above 0.75. Let me just put this behind. We're closing above 0.75 right here, telling me, okay, well, I'm going to keep holding till we go higher. Close above 0.5 right here, we're going to go higher. Close above 0.25 right here, we're going to fully fill the wick and go take out the liquidity, which gives you 2.61 as a clear low-hanging fruit. And you also had low resistance since the high is in close proximity right above the current all-time highs, however you want to call it, previous day high. So beautiful little trade, right? And if you had a small runner, you had objectives higher. I like to utilize standard deviations for objectives just in general. And as you can see, 4 standard deviations was right here where we would say terminus. So that was another beautiful setup that allowed. This one to me was a little cleaner than that first one, just in general. But of course, right now we have hindsight. So how can you really tell which one was better than the other? For me specifically, I traded this one. Did not take part in the second one because I was off my charts. Came back a little later during the day for the PM session and got another trade. So sorry about that. I'm just going to drink some little water real quick. I'm talking very fast and I'm throwing up a bunch of information for you guys. I just want to take a breather right here. Do we have any questions at all about anything I just pointed out for the day up to now? As I said, there's a lot of stuff that happened today, so it's filled with information. I'm not seeing anyone type, so I'm guessing it was pretty clear, correct? All right. All right, I like that thumbs up. Thank you. Just making sure I'm still with people in this call, right? You guys are still alive. That's awesome. But as I said, very nice little 3R trade right there to this objective first, but also 2.61 to this low-hanging fruit. And then you also had 4 standard deviations completing a 5R move. But what is 4 standard deviations? Well, that's terminus. That is the end of my move. And right, I'll just also put these breaker block standard deviations to give you guys a little more insight. I believe I actually utilized the bodies on this one. No, I'm trying to find the same standard deviation I utilized. Bodies of this. Yes, bodies of the manipulation-like standard deviations for reversal ranges. I just gave you guys a lot of insight right now that I'm going to share through a thread very soon, very soon. Well, I hope it will be very soon. But you had additional confluence from previous standard deviations of the manipulation leg, which also formed SMT. You know, we're just piling up confluence over confluence, telling you that this is a high probability reversal zone. And after the move was completed, from hitting terminus, what do we then have to do if we want to shift? Well, if I want to shift from a buy program, so from the buy side of the curve right here, to sell side of the curve afterwards, right here, well, I need to first take out highs. There you go. You have this sweep of liquidity, this stop run, which then forms your market structure shift right down here. Let me just mark it out. Market structure shift right through this, and then we see clear displacement. Of course, we did not have instant retracement, but that means you can then trade a continuation entry. So for a continuation entry, I'm going to go over this quickly because I want to keep the deeper knowledge about this for private students, but premium and discount, wait for a nice reaction to a premium in efficiency right here. If I would go to a 5-minute chart, you know what, let's do it right now. Why not? I just moved TGIF a little bit. There we go. Let me just lock that in so I don't touch it anymore. You have fair value gap, but most importantly, high probability order block right here that we traded back into. If we mark out consequent encroachment, which is mean threshold, sorry, we can see that we closed below in my 5-minute time frame, which is pretty enticing. We dive lower, we see respect, continuation. You can then trade either this bearish breaker block, which yes is formed in one candle, which is fine. See the respect of this level, and of course the wicks do the damage, but the body tell you the narrative. And what do we see from the bodies right here? They're all respecting mean threshold of this breaker block, which is just picture perfect, right? So that's why I like these high resistance days, because it actually shows what a versatile model can do, right? It's good in any condition. It will catch near the low of any large trending day, like yesterday, right? We saw it very clearly. We had an entry right here. Actually, right here was our entry yesterday. And then you have a high resistance retracement day the following day. And I already pointed out now a third entry taking this first. Let me just put this here. And you had inverted fair value gap, and then fair value gap. So your stop would be here for your third PD array. And you also have this inverted fair value gap, but your stop would be just like one tick higher, actually, perfectly one tick higher. So doesn't matter which one you choose. Let's just choose the larger one. Let's be, what's the word for it? Let's be pessimistic, right? And then you would find, let me just, let me clean it up a little. You would find an area where there is a high probability of reversal. Okay, so I'm going to look at my current range, which is from here to here, right? That's my current intraday range, but that is quite a large range. So I'm also going to find a closer, because if I look at equilibrium, I can also find a closer objective, right? This is consolidation. Then we rated and went back higher. We could revisit these low resistance lows before then going higher. But if I jump to a 5-minute chart and I go look at that premium and discount, I have liquidity under this low. But more specifically, this is my first discount in efficiency. And of course, best case scenario, with no hindsight, I'd like to see it take out this liquidity and then dive lower. But if we're following the rules 100%, you don't need it to see this liquidity taken out. And if we look at this liquidity specifically on ES, right here, you can see it did take it out way beforehand at this candle. So this candle lower took out this liquidity, which formed what? Well, SMT. So from the point where you see ES taking it out while NASDAQ isn't forming SMT, to me, in my understanding, I say, well, okay, well, NASDAQ took it out since ES did, so there's divergence at this low, so I'm acting as if it did take it out, so I'm taking money out manually, even though if we look solely at NASDAQ, it did not take out this level. So it's kind of weird, but you would be taking out money somewhere in this wick for your low-hanging fruit objective, and then if you stayed at break even, you would have gotten stopped out. This is the only point where it kind of sucks. You had multiple re-entry opportunities during this, and we'll go over one that actually Matt traded today. So that's pretty nice to see you in here, Matt. But if you had this trade going into low-hanging fruit objective, and then moving forward into lunch, consolidation, retracement, but then you see a lunch rate, right? So we'll mark out. I'm going to clear everything up again. Actually, no, I'll just zoom in, delete this, and this, and this, and this. There we go. If we look at the range from noon to 1, which is the first range you want to be looking at when you're looking for a lunch rate. This is noon. There you go. You can see that following that lunch rate, and also something big to point out is this is our 15-minute order block that we looked at the beginning of the call, and we'll go back to it very quickly. So if you're hearing a lot of scroll wheel, we traded back into this order block for a trend continuation, right? For a continuation of the reversal, which is one of the market phases, right? Consolidation, expansion, retracement, reversal. And we continued off of this order block after taking lunch highs. And yes, this is not in the form of a swing high. It does not need to be. We are looking at liquidity based on time. And then your first objective would be lunch lows. Then we had clear objectives lower, as we pointed out, right? The equal lows from the morning. Let me just mark them out as sell side liquidity. And if I go back to a 15-minute chart, and we just look, we had TGIF as well alongside external range liquidity right here. So you had clear objectives lower for multiple partials of opportunities. But if we look at the entry, we can see this breaker block formed very clearly. But then you have no fair value gap above, right? But what do you have? You do have an inversion fair value gap. Let me just mark it out. And to me, here, let me just also point out ES at this specific time. To me, the fact that we did not dive deeper before the entry possibility, right? But what did we do? Well, we went perfectly equal. Equals levels never stay, specifically on NASDAQ, right? Because on ES, you can see things like this, which, yes, are equal lows, but will remain like this for a little bit. But on NASDAQ, all I see is inducement. So that's when I would use the terms anticipating the breaker block. Not just all the time and just anticipating a breaker block, trying to predict the breaker block. But right here, you have perfect inducement right here. So to me, that is a breaker block even before it has officially technically formed. So that is a little exception, which maybe made you lose out on this trade. But let's be honest, you had plenty of opportunity during the day. So even if you did not get this picture perfect short with a super tight stop loss at the swing high and just offering already, what was it, 3.69R at the low hanging fruit objective, of course, in 2 minutes, looks picture perfect. Then going straight to your main objectives for 8.5R. And then you have also your 1 hour external range liquidity here for 9.38R. And if we zoom out for a second and we look at TGIF levels, you also have 12.69R right there. And let's be honest, as soon as you took out profits right here, stop loss break even, there was never any question it was going lower, especially with the very high respect of this fair value gap. Diving into it, respecting consequent encroachment, and never revisiting, you would not have been stressed. I can tell you I was not. And as you can see, perfectly at 4, that's when we went to reach our final TGIF objective. So it was a super clean move. But of course, as I said, it takes a little more experience, especially through backtesting. But you could have also traded a continuation trade right here. But this one is a little more complicated, so I don't want to take you guys into it because the clear trade was right here, right? This first lunch raid move, which is just a continuation of the reversal we saw at the end of the session for New York AM. But just to reiterate, we had 2 long opportunities in the morning, one just reaching low hanging fruit, one fully reaching take profits, and even running a little bit past take profits, with then offering a reversal, which if you took profit at low hanging fruits and then put your stop break even, you would have gotten stopped out off the continuation entry right here, to then follow with another short opportunity. So it was a day packed with a lot of stuff. What I like, well, I'm going to make a complete thread about it. So I'm going to leave it at that for now. But let's just say there are certain hours during the day. I'm not thinking, oh, well, I'm concentrating on certain hours. There are certain hours during the day where I don't want to be looking for setup, because there is a very low probability for setups that form during these hours to be successful, to be profitable. That has come, of course, through backtesting data, looking at successful setups and which times the entries form and the breakers form, and nothing after 11 a.m. for me is usually the best bet. More specifically, 11:10, right? You look at the 10:50 to 11:10 macro, and if there are no opportunities, then I'm done until the PM session, which for me starts at 1, because I start looking for a lunch rate at 1, and then if we have a lunch rate from the 12 to 1 session, then I expect 130 to be a Judas swing, and as you can see, 130 went up, but then we consolidated, so consolidation, small manipulation to bring us to our objective, which was this 15-minute premium in efficiency for a retracement, right, of this latest expansion range, premium discount. We just took out external range liquidity, retracement to internal before continuing to external, right? That is what I speak of when I say order flow. It's the constant flow of the markets, and all the time frames are working together. Was that clear? I know today was filled with a lot of information, but as I said, it was a day filled with opportunity for a very versatile model like the unicorn. I am not seeing anyone type, so I'm guessing it's a good sign. Well, hoping it's a good sign. This might be one that you have to rewatch a few times. That's awesome, Joe. Don't forget, guys, everything is posted on YouTube as well, so anytime you want to go rewatch it, and for the London people that are going to be watching this, this is one to rewatch a few times, because they were simple models with the perfect mechanical understanding. It was, whoa, sorry, a little sneeze for me, but it was the perfect mechanical execution that provided you with, what was it? You would have had like 2 or 3 R in the morning, offering then a 5 R move again in the morning, with then the possibility of a 12 R move in the afternoon, right? Awesome day that can offer almost up to 25 R, which is amazing for 127 handle range. So that's what I mean. When you have a big trending day, you catch very near the low and just the highest probability entry, which is not often the low, but your highest probability entry, which offers, what was that, like upwards of 200 handles on a big trending day. And then you have a retracement day, which you first trade the manipulation move to then trade the distribution. It just gives you a lot of opportunity, and even if you only caught one of these moves, it was a great trading day. I'm happy to see you took a lot of notes, Joe. If there are no following questions, I'm waiting to see if one of you guys types, but I'm not seeing anything, so I'm going to leave you guys to it. There will be no trading for me tomorrow, so I wish you guys all a great night and a great weekend. I'll be posting a poll in 5 to 10 minutes, probably less, in the announcements, because I will be doing some live backtesting sessions. So I just want to get a date and a time where I can get the most amount of people in here. So just make sure you take a second and go for that announcement when it's posted. Just go put up your vote. And for now, we'll be saying bye. You guys have a great night. And for those of you trading tomorrow, have a great trading day. Goodbye, guys.